Hi guys, it's Joe at Signal Centre. Just another short video for you all today. Just want to cover a couple of topics that I'm sure some of you have all experienced in your life before, your trading life, just to try and avoid you getting into situations where you're conflicting with your trades and there's a sort of correlation breakdown between what it is that you're looking to trade. Just going to cover this from a number of reasons, really, just in order to try and make you all a lot more efficient when trading, to try and reduce the costs of your trading, and also to lower the amount of emotional stress that we've all experienced when trading as well. So first of all, I'm just going to run through these three charts that I've got on the screen. So just going to run through a quick scenario with you all. So let's just say we're looking at cable. So we've got sterling long, sterling euro dollar, US dollar chart here. We've got a bit of an uptrend, so if we suggest that we're looking to buy on a retest of this trend line, or looking for some sort of reversal candle around here on the hourly chart, then you might think, yes, I want to get long of cable. So just to break that down into simple terms, you are going to be long sterling and you are going to be short US dollar. Now, say if you're scanning through your charts and all of a sudden you come across this on the sterling yen. You're thinking, oh, okay, that looks like a little top there on the 60-minute charts. We've got a breakdown there. I look to sell there, think it's going to come down to here. So at which point then you enter your short in sterling yen. And again, to break that down, you've got a short position in sterling and a long position in yen. Now, when you've got these two trades open together, what you've effectively got is a long position in sterling and a short position in sterling. So assuming your sizes are roughly the same when you're trading, you've effectively netted off that trade in its entirety, so you actually have no exposure to sterling on that basis, at which point then you are long Japanese yen and you are short US dollar. Well, we can replicate that same chart right in the middle here with the US dollar Japanese yen chart. So you've gone long of cable, you've gone short of sterling yen, so that effectively means that you are short US dollar Japanese yen. So looking at this chart, does that correlate or correspond with what you're seeing on these two charts? Does that support the view that you've got? If it does, great. But the issue here that I'm trying to raise is you've now got two trades open instead of one, which effectively you could replicate by only doing one trade. By having two trades, you've then got double the amount of spreads that you've paid. You've got double the amount of overnight funding fees should you decide to run the position. You've got two lots of decisions to make when it comes to closing these positions and managing them. So that's double the emotional stress, and it's going to create, as I said, two lots of decisions that you're going to need to make. And also you're going to be less efficient here. You've got the cost drag, and you've also got the potential for you to be in these trades for a longer period of time, because effectively you've netted these sterling trades off, and therefore got the US dollar yen trade open. You could be in this position longer than you want to be, and therefore that could mean that you're going to miss opportunities elsewhere. So how do we combat that? How do we stop this from happening? How do we avoid getting ourselves in this situation where you've got two trades open but you could have done it in one? Well, the one way that I do it is I take a look at baskets of currencies. So what I've built here is a sterling basket, a euro basket, a Swiss basket, Aussie, and so on and so forth down to the bottom there. And what they are is all the currency pairs that I trade, all combined against each other. So if we just take a look at this here, you can see from the watermark. So this is sterling Oz, sterling CAD, sterling CHF, sterling yen, sterling New Zealand dollar, sterling US dollar, sterling euro, all combined together in one chart to give us this basket. Now what I do with this basket on a weekly basis, typically on a Friday afternoon, or if I don't have any time I'll do it over the weekend at some point, is away from the market and away from any distractions of live prices, analyse these charts, and from that work out where I think they're going to go and whether or not I'm bullish or bearish on these pairs for the week ahead. So this week, when I went through my charts, I decided that I was going to be a bull of sterling, so I've tagged that in blue. The same for euro, for the reasons that we had this bullish outside week last week, and we've got this channel that's formed, and we closed back above it with this big outside bullish bar on Thursday last week. So I decided I wanted to be bullish of euro for the week ahead. And then conversely, I'm looking at the other markets, and I've decided that on Swiss pairs we're trading in this channel, and I think it's going to continue to correct lower, and we've broken down this bullish trend here. So I think CHF pairs are going to go lower for the week ahead. So I've gone and done that through all the markets. So then I've got them all tagged. So then I can start pinning down and narrowing down what pairs I want to trade for the week ahead. So first of all, I'll look at sterling, and then I'll be looking to be buying sterling pairs against the pairs that I'm looking to be bearish on. So I'll be looking for longs in sterling CHF, longs in sterling Oz, longs in sterling US dollar, sterling CAD, and so on. Then I'll repeat the process for euros. I'll be looking to buy euros against these bearish pairs, and then I'll be looking the other way around. So the CHF pairs, looking to short those against pairs if they're that way around. So I think the only one that actually corresponds for is CHF Japanese yen. So then I've got this watch list and I've tagged them all. So from that work that I've done, I know I'm going to be bearish on Aussie dollar yen, so I'm looking for opportunities to sell. So then I'll go through my charts and annotate those, and then look for entries throughout the week. So it just helps me to avoid conflicting myself and being less efficient when I'm trading. Having that plan in place at the start of the week, can save you, save you quite a lot in terms of costs over the course of your trading career. So please bear it in mind. It's just a little tip, something that I've sort of worked on over the last few years, and helps me get in those positions where I'm in 2 trades, but I could just be in one, rather than doubling up the cost, doubling up the emotions, and the decision making that's involved when it comes to trading. So just a short video. Hope you like that, and I'll be back soon with some more, no doubt. Take care, all the best.